inflation drops the economy, the more potential money you can make in crypto.
Oh yeah.
Yeah.
Well, and it goes back to this too, like if we want to simplify things, right? Warren Buffett said, buy when there's blood in the streets, right? When everyone else doesn't want something, it's exactly when you should buy it, even though it goes against every ounce of your being, right? I even struggle with it, you know? It's just like, I've bought more crypto, I bought, more Bitcoin at 18, 19, 20, and it's just like, I should probably be buying more. I'm like, yeah, could it go lower, but I'll buy more there too. I mean, you want to make sure you keep dry powder in the end. You always got to have dry powder. The most frustrating thing is when there's a great buying opportunity and you have no working capital, right? I've made that mistake back in the day a few times. In fact, that actually is something that happened to me when Bitcoin was down at like 3,800 back after the 2018 crash. I had so many real estate deals going on, I was beyond illiquid. Like I'm talking like using credit cards to finance renovations, and not that you should do that. So I had like no cash available. And I'm looking at Bitcoin under 4K, and I actually told my mentor, I was like, dude, I want to buy so much Bitcoin right now, and I am like beyond illiquid. I was like, I'm literally thinking about getting another credit card to buy crypto with. I was like, but that's just too far out for my risk scale. Like, that's why I'm called the scaredy cat. I play it pretty.
Manage your risk. Everything is crypto is managing your risk.
Yes.
You put money that you know you can.
Investing is managing your risk,
yeah.
right? And in the end, right, it's all about asymmetrical risk, right? In fact, there's Tony Robbins wrote a book called Money Master the Game, and in that book he interviewed a ton of different money managers and successful people, just in the financial sector. And the trend that came through all that was all of them did not invest in something unless they had a 5-to-1 risk reward. If there wasn't 5-to-1, they weren't in it. And generally, when any of them went in kind of a slump, it was because they were taking on investments that didn't offer them that 5-to-1 ratio. And that's always stuck with me. And every time I do an investment, I'm like, asymmetrical risk, what's my upside versus my downside, right? And that's even like with day traders. So like back in the day, I day traded on equity prop desk back in like from 2008 to 2012. And even when we did that for day trades, like minimum 2-to-1 risk reward with your quick little trades, right? You always got to have that better, because in the end, you're not going to be right 100% of the time, ever. In fact, if you're right 50% of the time, you're literally like cream of the crop when it comes to especially like trading, whether it's stocks or crypto. So real estate, a little different. I think that's why we like it.
How you doing?
What's up? Come on in.
How you doing, Rich?
Yeah, what's up?
Very amateur question, but you got me thinking now. Who put the limit on the amount of Bitcoin? And why is there a limit?
The inventor did. The mysterious Satoshi Nakamoto.
I don't know. There's a limit.
Yeah, 21 million.
It's the value.
20 million. Well, that's also why this is a thing here. So like
what is the farming thing? Not farming. There's a
mining.
What is it?
Mining.
Mining.
Yeah.
There's mining and there's farming.
What is? I thought mining where there is kept a server or something with Bitcoin in it.
Well, no. So basically,
Or data.
essentially all it is in the end is computer code, right?
Right.
And why it was set at 21 million, you could argue that for 25 days. He could have done 25 million, he could have done 30, 15, whatever, right? The whole point was we're going to set a limit so that we can have a token or potentially a currency that's not inflationary, right? Because the difference is you have the US dollar, inflationary, why? We can print anytime we want, right? Bitcoin can't. Set amount, right? So what does that do though? It actually is inflationary in a way in terms of its impact, right? Because now you have scarcity where it's like, all right, there's only 21 million coins, there's people that own a lot of these coins. Now you're talking about lack of supply, right? You don't have them out on the market. So what does that happen? You got demand pushing up value. This is why I believe in Bitcoin in the long term, simply just for that reason, right? And that's why I also think it's gonna be a store of value, because just like, obviously physical gold, you can always mine more, but there's only so much physical gold, in the earth, right? And it's slow to acquire, it's clunky to deal with. Now, obviously that doesn't feel like the case with Bitcoin, but when it comes to cryptocurrency, Bitcoin actually fits all those characteristics, right? It's got a limited supply, it's slow, clunky, and archaic for crypto technology. It was the first one. There's just been improvements.
To print one.
Yeah, and that's the thing. Like, and even transferring one is so much slower than so many other networks. Like there's cryptocurrency, like there's the Hive blockchain, which is one that I'm on a lot because it has social media sites attached to it, where I literally like do social media stuff, and I make crypto for posting social media articles and whatnot. And that one literally has 3-second transaction times and it's feeless, 0 fees, as opposed to Bitcoin, where you pay a small fee and it can take anywhere from 10 to 30 minutes for your Bitcoin to transfer. So this is why I'm like, Bitcoin literally is digital gold. Like something's got to play that role within the digital currency universe. Bitcoin's set up perfect for it.
Is there a risk that this person can say, hey, let's create some more Bitcoin? Or like what's set at that number?
When the blockchain essentially was launched and created.
It's the code for
Yeah.
because it's
So that's a maximum.
That's it.
It's a maximum
That's it.
code. It's like when you build a robot, for example. It says, let's say, for example, let's take a phone, for example. You said the phone, you build the phone while you're creating the phone. You said the phone can only call people. It cannot do anything but call people.
So that system is just limited to that period.
Yeah.
Yes.
To that certain.
And I'll actually, you know what, it'll make more sense because I have a slide that will kind of break down the blockchain a little bit. But I mean, in the end, like, all the stuff we were just talking about kind of just leads into, why even mess with crypto, right? And again, it goes back to a lot of the same reasons that we mess with real estate, right? It's like, all right, well, how do we make money and essentially not watch our dollars devalue? Like, you can't keep money in the bank. Like, if you keep money in the bank, you're losing money every single day. And this has been true now for basically forever, but like even last year, like I spoke at an event up in Orlando and we talked about this. It's just like, you're literally paying, like, why do you keep money in the bank? To feel safe? Probably. I used to. So I call it a safety tax. You're paying a safety tax. It's like, all right, I feel safe, I have a bunch of money in the bank. But that money is literally eroding day by day because of inflation. So it's like the government basically has forced us to put our money to work, right? So we do it with real estate, we do it with stocks, I do it with crypto as well now. And there's a way to also, and here's what's beautiful, as the industry has evolved, there's a way to generate income off your crypto. So like I've turned my crypto basically into digital rental properties in a way, and I earn more passive income from my crypto now than I do from my real estate portfolio. So that's been game changing. And that's because of decentralized finance, which is a whole other thing that we're not totally going to get into.
You're
But
not going to tell us about that?
we'll talk about.
Ask him when he takes questions, people.
I got someone paying me a lot of money to create a course on that. But anyway, so this goes back to like, all right, so what the heck is Bitcoin, right? So there's a reason I titled my book, Knowing What the Heck Bitcoin Is, because that was always the question. Especially like in 2018 when Bitcoin was hot, like I'd be at real estate meetups and half the meetup would be talking about crypto. Since then, half the meetups just talk about Airbnb all the time now, especially in South Florida. I don't think there's a real estate meetup you can go to now where it's not just Airbnb almost the whole time. So this is like an aberration with the wholesaling. It's awesome. But anyway, so yeah, what the heck is Bitcoin in the end, right? What's the point? Now we talked a little bit about it, right? We talked about, it's basically got a finite supply, so therefore it's not inflationary, it's deflationary, so to speak, but inflationary in terms of potential price because of supply and demand dynamics, which in the end, everything economically comes down to supply and demand. So anytime you hear anyone, making predictions, this, that, and the other thing, it's like, that's great. I don't care what data you show me. Everything in the end comes down to supply and demand, whether it's the real estate market, whether it's the stock market, whether it's the economy on a whole, right? And that's why, like, we saw that, obviously, think about when COVID with the supply chain issues, right? You couldn't get stuff. Stuff got more expensive. There was a supply issue, which is always fun when ships are sitting out in sea with our supply. That's another story. So anyway, actually, you know what? It's a good time to do the raffle. So I'm going to give away a copy of the book. There you go. That is the book and the title for a reason. Let's see who.
You can't win this one when you use your raffle. Don't even look over here.
I'm going to laugh if it's his.
No, he already used his ticket.
All right, we got 168. 168. Anyone? Bueller?
Bueller? Anybody?
Let's get to the point
I
where
don't think anybody left. Did somebody go to the bathroom or something? 168, the last three.
168.
Pick another one.
I got 167.
Going once, going twice. I'm just glad.
Oh, I think that was Ed Sullivan. You here?
He left.
Oh, that was Ed Sullivan.
Ed had to do
Ed
deals.
left. Ed, he could have got the
Ed had to do deals. I'm just glad that someone knew, what I meant when I said Bueller. We're getting old. My movie references are getting outdated.
I love it.
Look at that, we only dropped a couple points. We're at 166.
That's me.
Boom, there it
you
is.
go. Very nice.
You learned in crypto, no problem. It's a short little read because I like to get to the point.
I like short reads.
Yeah, I was like, there's no reason to fluff it up. It's like, this is what you need to basically understand crypto enough to buy some and not feel like you're gonna do something dumb and, donate your money to the crypto gods, which you can do. We've all done it, me included. It was actually Ethereum I did it with. And I want to know what amount of money that is now, because I did this back in like 2016 when Ethereum was worth like a fraction of what it is now. So I don't think about it because I don't know what the dollar value is now. But anyway, so if anyone else wants the book, Amazon. Richard, you didn't hear that.
I may get it.
All right, so here we go. Bitcoin. This is what it comes down to. The good old blockchain, right? It's not real. You can't hold it. It makes people really nervous. So the Bitcoin blockchain was the first blockchain. This is what started it all, right? So block 0 is also known as the Genesis block, and all a blockchain is essentially it's a ledger, right? It's just a ledger. But the beauty about this ledger is it is open source, open ledger, and trustless. Now, what do these things mean? Open source means this code is available to anybody. Like you literally, there's a website you can go to, and if let's just say you decided tomorrow you want to try and mine Bitcoin, you can go, you basically download the software, basically you run a node is what it's called, and you can essentially try and mine Bitcoin. Because what you'd be doing, you'd be competing with all the other people that are mining Bitcoin to essentially solve the algorithm to win that block and get rewarded the Bitcoin that comes with basically producing that block. So in the blockchain, you have a hash. And essentially that is what labels the block to basically validate it. So you'll see block 0 had its initial hash, and then you see block 1, and you see the previous hash, and then it's the hash. That is sadly how simplistic it is in terms of creating the chain. So now, as you move forward, you see block 2 has the previous hash of block 1, right? Which refers back to block 0. This is how it's all connected, right? So in theory, all the data in block 2, it has all the data essentially that's in block 1 and block 0, right? Because it can be traced back. This is how you essentially create the integrity of this chain. Now, open ledger means basically it is an open ledger. As in think about you have a corporation, right? And they do their quarterly reporting, right? Because their books are technically private. They report their, financials at the end of the quarter. But do we really know what's going on? Do we know if they're lying? Do we know if they're pulling an Enron, right? Remember Enron? Enron can't happen with the Bitcoin blockchain because it's completely open source, open ledger, right? You can see it. You can do, if I gave Richard one of my wallet addresses, he could literally go on BitExplorer and he can plug that in and he can see any transaction I've done in my history of interacting with crypto, with Bitcoin, right? Which is sort of mind-blowing because it's wait a second, that's not very private. You can see everything I did. But at the same time, it is because my name's not attached to that wallet address.
Wait a minute, a wallet address?
It's like a key.
I'm getting to it.
Oh, okay, you're getting...
Slow down.
Hey, I'm with you, okay?
Slow down. So,
Go ahead.
anyway, in the end, do you really need to know how blockchain works? Not really, but it's good to know the bare bone basics. There's also different types of blockchains. What Bitcoin is known as is proof of work, which you'll see in the book. Proof of work is basically a blockchain where you're mining, right? So basically you get rewarded for putting in work. So you have your miners, those are essentially working, right, to try and win that block and get that Bitcoin. There's other types like proof of stake, which is the big news with Ethereum, they're going to switch to a proof of stake blockchain. That one more so is a skin in the game one, as in you get that coin and you stake it to prove that basically you're loyal to that blockchain, and essentially you can become a validator is what they call. So instead of being a miner and being rewarded with the coin and solving algorithms, right? You're essentially validating transactions. Because when you're mining, that's also what you're doing. When you produce a block, you're basically also validating transactions, right? And then every time a block gets produced, transactions are validated. So if I send Bitcoin to Richard, right, I'm basically going to wait for that to get validated and essentially produced in a block. And then the last word, trustless, excuse me. So trustless basically means we don't have to trust anybody. Like, we don't need a middleman. We don't need an escrow agent, right? We don't need an intermediary, right? Because that blockchain, all of the Bitcoin miners are basically working and validating the same blockchain. So I haven't looked in a while. Last time I looked, I think there was like 14,000 nodes being operated all over the world, right? And it's the same ledger that they're all working and that they're all validating, right? So in theory, if someone tried to create a false block or false transactions, it wouldn't be validated by the other miners. They'd also need to have 51% of pretty much all the computing power of that blockchain too, so that makes it even more difficult. So anyway, the point is it's a decentralized network, right? So I mentioned earlier nodes, those are computers and servers running the Bitcoin blockchain. Anyone can do it. It could be you, me, Jane Doe, whoever wants to do it, right? If they want to buy the gear and if they want to learn. Number of nodes, you can literally look at. If you go to bitnodes.io, you can see how many nodes have been running. And that number just keeps increasing. I mean, it ebbs and flows, obviously, with the bull and bear market. And then again, I mentioned how it's open source. You go to github.com and literally grab the Bitcoin blockchain and run the software. So now, when you look at this graphic, basically that's what I want you to picture. Think about Google, right? Anytime you go on Google, you search something, you get an answer in like 0.3 seconds, right? No matter where you are in the world. The reason that happens is Google has servers all over the world, right? But Google is the centralized authority. Everything runs through Google. They make the rules. If they want to tell you can't do something with their stuff, you can't do it. If they want to, I mean, think about, what was that? I think it was October last year when Facebook had that outage. And like literally you couldn't do anything on Facebook for like 4 or 5 hours. Like everyone was freaking out, right? Again, why? Central point of failure. And then plus that, you got, again, control. Think about YouTube, right? The content that you're allowed to create, you're not allowed to create. There's been so many people kicked off of YouTube in recent years, especially for crypto content, right? All of that is because you have a central authority and also a central point of failure. So now, if you look at the icon, there's a globe in the middle, right? Because that's essentially what's going on now. There is no central point of failure. It's servers all over the world that are run by, again, individuals. Me, you, anybody, whoever's running a Bitcoin node, right? So if my server blows up, it's not going to stop anything because there's 14,000 other people running the same exact ledger, right? And mining Bitcoin. So that's what's beautiful about it. There's no central point of failure and there's no central authority, right? It's decentralized. There's no Uncle Sam. There's no, there's no dictator. There's no anything, right? So this is one of the things that gets people excited about cryptocurrency. Now, that doesn't mean you can't have a blockchain that is centralized. Like IBM's been using blockchain technology for like 3 or 4 years at least now, like for logistics, because blockchain is awesome for logistics tracking because it creates that chain, right? And you're not losing the history ever. Like they can just use trackers, and with blockchain technology, they know every step of products going through, whether it's coming from China or wherever it is, right? And you have to worry about essentially corruption. So anyway, as far as where to buy crypto, I put this up for you guys because there's decentralized finance, there's decentralized exchanges, all that. Honestly, really difficult to buy crypto through those. The easiest way to still buy crypto is unfortunately through centralized exchanges. Now, an example of a centralized exchange is Coinbase, is Crypto.com, is Gemini, Kraken. There's so many, right? So a centralized exchange like Coinbase is basically the equivalent of like your Charles Schwab for stocks, right? Like when you want to buy a stock, you go on Charles Schwab, you go on TD Ameritrade, whatever it is, right? Like, and you have to. There's really no other option. There's no like decentralized like thing. You can't do peer-to-peer stock transactions, right? With crypto, you can. But that's a little further down the rabbit hole, kind of past beginner knowledge. It's still easiest to purchase crypto using a centralized exchange. I still do. Like I use Coinbase to onboard fiat dollars, right? If I want to take in US dollars and turn it into crypto, I just use Coinbase to buy it, and then once it's cleared, like once my money's cleared, I send that thing right off Coinbase onto one of my crypto wallets somewhere, right? Because there's a saying in crypto, not your keys, not your coins. Which meaning, if your crypto is sitting on Coinbase, right, equivalent to if, you know, you're using Charles Schwab or whatever, you're at the mercy of their rules, their regulations, and what they tell you to do. So if I have my crypto sitting on Coinbase and Coinbase decides to make some type of, you know, user agreement change or whatever, and now I can only like pull out X amount per day or whatever it is, or I need to verify more of my information, right? I'm at their mercy, right? If I have it on my own personal crypto wallet, no one can tell me anything. I can do whatever I want with that. So, and I actually wish I would have threw a slide up there for crypto wallets. There's all different types of crypto wallets. You can have a wallet that's basically a software that you literally have on your computer. You can have what they call a hard wallet, which is literally a separate physical device. It basically looks like a hard drive that you can plug into your machine. And there's also software-based wallets where they're usually just like web plugins for like your internet browser. And all three of those serve different purposes. What you need to remember is when it comes to wallets, what happens is you get essentially what they call wallet keys. And the keys, that's the key to everything. And that's why the mantra in crypto is not your keys, not your coins. Because if you don't own the keys to that wallet, then you don't have full control of those coins. And when you have, again, crypto on a centralized exchange like Coinbase, you're basically, they're acting as custodian, right? So your crypto's in their wallets, which they have the keys to. So they have full control of it, right? Like I said, your own wallets, you have the keys, you have full control, and you know, I always joke and tell people, with great power comes great responsibility, because if you mess up, there's no FDIC, there's no, you know, call support, like you messed up, like your money's gone, like, and that's what scares a lot of people with crypto. Yeah, exactly. Like me personally, I love that because I want full control of my money. I'm like, this is awesome.